Do you want to double your money in 3 years? Let me tell you how. And I did this. I started investing only 3 years back, and I have managed to grow that corpus, that amount of money, to twice of what it was when I started. And it seems like a big deal, but actually, if you break it down, it's 24 to 25% return on the initial, let's say, 1,000 rupees, grows by 25%, becomes 1,250. That 1,250 grows by another 25%, becomes 1,600, grows by another 25%. Voila, you're at 2,000 already. That's the power of compounding. In fact, I would call it the magic of compounding. And I will talk about this a bit later. But first, how do you get started? So, the first thing that you have to do is to save. Only when you save can you take that money and invest. And how do you start saving? Let me give you an example. After coming to the US, I have a different cost structure going on in life. So, I have been maintaining an Excel sheet, which I share with my wife, and we note down all our expenses of every month in that: rent, electricity, groceries, eating out, etc. After I deduct all my expenses, how much have I left in my bank account at the end of that month? And that's the amount of money that I can look at putting into an investment. But I'm not going to put all of it. I have to keep some money in case of medical emergencies or something of that sort, right? But the rest I can invest. Now, what will you invest in? For this, you have to understand what is called asset classes. Some of this can get very confusing very quickly. So I hope I'm able to demystify it for you. I would say there are broadly four asset classes or four different types of things that you could invest in. The first and the most common you'll hear all around you is shares or stocks or equities. All means the same thing. It basically means here's a company, let's say HDFC Bank, and you believe that it's a very good bank, it's well managed, it generates a profit at the end of the year, and you would like to own a small piece of that business. How you do that is by buying shares of HDFC Bank. I'll talk about how you can start buying and selling shares a little later. So that's your first asset class, equities. The second asset class that you have is fixed income. With the first asset class of shares, you can't actually predict how well your money will grow. With the second asset class, which is debt or fixed income, you're guaranteed a certain percentage of return at the end of the year. Return means if I put in 100 rupees today, at the end of the year, I will get 108 rupees in my bank. So it's grown by 8%. Usually, when you compare these two asset classes, the big difference is shares are less predictable and therefore higher risk, but also higher returns. You can expect 15%, 20%, sometimes a 100% return on your investment in shares. But with fixed income, as the name suggests, it's going to be 8%, 10%, 12% at the most. Those are two asset classes. The third asset class, which again, you'll hear a lot of people talk about, is real estate. You buy a piece of property, land, house, or a commercial property like a shop or an office space, and you give it out on rent. So there's a rental income that comes, and also the base value of that property increases over time, hopefully. And so, should the time come when you need money and you want to sell that, you will have gained in terms of the value as well. Plus, you'll be earning a rental income every month. Now, for most of us, investing in real estate in this fashion is difficult because most of these investments are high ticket, right? We barely manage to own our own house in our lifetime. Imagine saying, go park an equal amount of money in an investment somewhere. But there are ways and means in which you can invest in real estate without parking a huge block of cash. I'll talk about it in a short while. The fourth asset class is pretty much everything else, all the exotic stuff. Crypto, should I buy Bitcoin? NFTs, what the hell are they? You can even buy yachts and art, jets, and pretty much any asset that you can think of, you can buy small parts of it. There are people who will buy the larger asset and then take money from many other investors and create a fund. I stay away from this fourth asset class. It's very high risk, might be very high return, but it makes me very uncomfortable. I completely forgot the most favorite asset class of our parents, gold and silver. Again, there are very interesting, new, convenient ways to invest in gold and silver. You don't actually have to go out to your neighborhood jeweler and buy gold bars or biscuits or coins. There are more interesting ways to do that. I'll talk about it in a bit. Now that we've understood our five broad asset classes, how do you actually go about putting money into any of these asset classes? You broadly have two options. One is you can invest in that asset directly, or you can invest in that asset through a fund. So now that you've understood the idea of asset classes, the question arises, how do you get started? The one option that you have is to figure out a way in which to invest in this asset class directly. So, for example, if you're talking about shares or equity, you would do that through opening up an account with a share trading app. Zerodha, Upstocks, Grow, many of them, right? Same with real estate. You can hire a real estate broker, find a property, invest through them. But there is a different way, and what I would suggest a safer and a smarter way to do it, which is that would you not trust somebody who's been an expert in the field, who has 20, 30 years of showing you proof that when they invested, they made good returns on that money? You would bet on that kind of a person, right? I would too. Those people are called fund managers. They basically have a team, the right software, the right data to analyze. They look at hundreds and thousands of companies. And then from all that analysis, they say these are the right 20 companies to invest in. So, would you not rather park your money with a fund manager like that than go figure out those 20 companies yourself? That's what I would do. Now, these fund managers can help you invest in shares in the public stock market, or fixed income products that we spoke about, or real estate investments. Pretty much any investment class that you talk about, there will be a fund for it. How do you figure out these funds? How do you get started? You can find online a list of the mutual fund companies. I will put a link to a website that compares all these mutual funds and their returns over the last 5, 10, 20 years. And from that, you can figure out which is a mutual fund that has shown consistent growth, has had a consistent track record of good returns, and park your money over there. Okay, let's drill this down to what you could do tomorrow. Let's say you figured out that I can invest 5,000 rupees every month. Let's say you're now sure it has to be through a mutual fund. The first thing that I would say is go to the mutual fund's website, open up an account, and choose a category called SIP. SIP is Systematic Investment Plan. This is every month you're committing to put 5,000 rupees no matter what. This is building in you the discipline to save and invest every month. Which fund should you choose? Hundreds of funds are there. From the same mutual fund company, you will find dozens and dozens of funds. Don't think too much. Choose what's called an index linked fund. Let me spend a little time explaining to you what is an index linked fund because it's important. You might feel that banking is a great sector to invest in, or technology is a great sector to invest in, anything of that sort. But you've not done all of that research. In all of these sectors, by the way, if you look at it historically, they go up and down. It's cyclical, right? So your best bet is to invest in a large basket of stocks. And that's what an index linked fund does. It invests in the 100 or 200 companies that constitute the index. When we say the stock market is up or stock market is down, what it means is that on average, the share price of these 200 companies is up or down. Okay. And these 200 companies are some of the biggest companies in the country. Like if you look at the National Stock Exchange or the Bombay Stock Exchange, the 200 companies that constitute the index or the value of the exchange are the who's who of Indian industry. So while a particular company might do great or go down or up at different points in time, this bouquet of 200 companies historically over 60 or 80 years has always done well. So that's kind of like a no-brainer safe bet. Then from there you can go and diversify and you can do your own research and take your own bets with additional money. But this is almost a no-brainer to put a certain amount of money every month through an SIP into an index-linked mutual fund. So get going with that and see your money grow.